Okay, my dear students, now we are going to discuss about our GST amendments which are applicable for May 2024 attempt. Generally, this particular amendment video is useful for the students who studied the amendments up to April 30th, 2023. Okay, because if you wrote in November 2023, then you may have studied the amendments up to April 30th, 2023. But now you are going to write May 2024 attempt now. So that's fine. From the date 1st May 2023 to 31st 2023, whatever amendments that came into scene, all those amendments are applicable for May 2024 attempt also. So that's why whatever the amendments that happened between 1st May 2023 up to 31st October 2023 are incorporated in this particular material. And along with that, previous attempt amendments are also included as a just precautionary measure. If at all those things are not asked in the previous exam, there is every possibility that it can be asked in the current exam now. So in order to make you familiar with those amendments, exclusively to keep focus on those amendments are also incorporated. So without any delay, now we are going to enter into this May 2024 attempt related amendments. So the first amendment is there in our supply chapter, that means supply under GST. Okay, so before going to discuss about this particular point, I just want to remind you what is the old point and what is the new one. Okay, fine. Now we are going to see regarding what is the point that is there in supply. Previously, what is the existing provision is, if you are able to recollect section 7, in that 7 there will be 3 subsections, just like 7.1, 7.1a and 7.2. So in this 7.1 there will be 3 clauses already you know, 7.1a, 7.1b, 7.1c, like that. And 7.1e simply deals with the classification, and 7 subsection 2 deals with out of scope supply. Out of scope supply. Okay. In this 7 subsection 2, if at all you are able to recollect, actionable claims are actually covered. What is meant by the word actionable claim generally? Simply, there will be a very lengthy discussion on this actionable claim, but in brief, what we can say is the claim on which we can take legal action even though there is no security. Even though it is an unsecured debt, on that, if at all we are able to take a legal action, it can be termed as actionable claim. Okay. So now the question is here, is it actionable claim is a good? Yes, every actionable claim is a good under our CGST Act. Already we know that point. But if at all you observe 7 subsection 2 read with schedule 3, there will be 6 points in that. In that, the 6th point is actionable claims other than betting, gambling and lotteries are neither the supply of the goods nor the supply of service. If you are able to recollect it, this is a present point. Before amendment, this was the situation. As per 7, subsection 2, read with schedule 3, 6th point says that actionable claims other than betting, gambling and lotteries, we are not liable to pay any GST. Okay. Actionable claims other than betting, gambling and lotteries, we are not liable to pay any GST. This is a present provision. Okay. Now, in which way it was amended, we need to see that. Okay. So, now you can observe here. What is the amendment, ma? Now, what is the amended provision is here? The taxability of 3 other actionable claims, namely online money gaming, casinos and horse racing is charged at 28% on these activities, and the valuation would be prescribed under valuation rules. That is okay. So what is the previous entry that was there in 7 subsection 2? Actionable claims other than betting, gambling and lotteries, we are not liable to pay any GST. But whereas with respect to now, the amendment entry is actionable claims other than specified actionable claims. So now the word specified actionable claim was created. Now the word specified actionable claim was created. That means the actionable claims other than specified actionable claims, we are not liable to pay any GST. Okay. Now the word simply they just inserted a new word that is known as specified actionable claims. The question is here, sir, what is meant by this specified actionable claim? Is it defined? Yes, it is also defined. You can observe. So this is. So these are the specified actionable claims. In that, if you observe, betting, gambling, lotteries, already there previously. Now the three things that was newly added is here: casinos, horse racing, and third one, online money gaming. So these are the new entries in this particular thing, actionable claims here. And all the 6 are named as specified actionable claims. So what is present kept as out of scope of supply as per 7 subsection 2 ma? Except these specified actionable claims. Rest of the actionable claims are neither the supply of the goods nor the supply of service. That is the point we need to remember. Okay. Now the question is, yes, already you know what is meant by these casinos and horse races. The only thing I think this can be asked in the present exam is online gaming. Sir, what is meant by this online gaming generally? What is meant by this online gaming, ma'am? Simply, there is a difference between, online, I just used the word online gaming. No, online gaming is not included here. What is the thing that was included here, ma? Online money gaming. Sir, what is the difference between online gaming and online money gaming? Online gaming, online money gaming. So what is meant by this online gaming? So online gaming means if any game that is capable of being played on the internet, offered any game, and it includes online money gaming also. Oh my God. It includes online money gaming also. Say nowadays so many number of people are playing so many number of games. Those things are known as online games. The question is here, sir, online games are covered under specified actionable claims? Answer is no. The thing that is covered under specified actionable claims is only online money gaming. Sir, what is meant by this online money gaming? Online money gaming means what we can say is it is an online game. It is an online game. First condition, it should be online game. That means only through internet you should be able to play that. Second one, you should deposit money or money's worth, or it can be a virtual asset. It can be a virtual asset. That means you can deposit either money or money's worth, or it can be a virtual asset also. And the third one is there should be expectation of winning money or money's worth. Okay, that means there should be a expectation to win. What they should expectation to win? Money or money's worth. Okay, And the fourth condition, the most important one is whether its outcome depends on skill or luck or both. Okay, ma. These are the 4 points that it satisfies. Generally, it can be treated as online money game. First one, it should be an online game. What is meant by the word online game? Online game means the game which is offered on the internet, okay, or an electronic network. And it includes, already I told you that OMG, online money gaming. So the question is here, sir, what is meant by this OMG here? OMG, online money gaming means, first point, it should be online game. Second one, in that generally the players will deposit money or money's worth. That means sometimes you can play directly with the money, or some apps will say that you need to deposit the money into their wallet, thereby that using the wallet balance you can play the game. That one comes under money's worth. And virtual assets, virtual digital asset actually it is, not virtual asset, exact word is virtual digital asset. Digital asset means what we can say, virtual digital asset means like cryptos. Nowadays, cryptos are accepted everywhere. So, in order to cover the cryptos, generally the word virtual digital assets were used. So, generally you can deposit the money in crypto. The prize money can also be in the form of crypto. That's why in order to cover those cryptos like assets, the word virtual digital asset was used. Okay, that is the second condition. Third one, definitely why you are playing the game. We are playing the game in the expectation of winning money or money's worth. I told you like it can be in crypto or it can be in some other form. Okay, there must be some expectation to win the money. And fourth most important thing is the outcome. Whether it depends upon the performance, which is based on the skill, or it may be purely a luck, or it may be a both of them. Why this word skill or luck was used there, ma? The point is very simple. If the point is simply, generally, if the matter, say for example, let's say take the example of Dream 11. Generally, what the Dream 11 app people will say, app management will say, sir, here if at all it is a pure luck, it will be kept outside. Now, what the people will say, no sir, it is not a pure activity of luck. In order to make the team, people actually they need to use your brain. They need to use their dimag. Okay, then only they are able to set the team. Thereby they will win the prize. So here luck factor is there. But here the outcome is not 100% dependent on the luck. It can be, it will be dependent on the skill of the person also. Then what the Supreme Court will say then, if the matter go to the court, okay, then it can't be a pure game of luck, it can't be an online game. So then the main purpose of this government amendment will get defeated. That's why government don't want to happen like that. That's why what they come up with a solution here. The outcome is depends upon the skill or luck or both. That means because of your skill you got that money or because of luck you got your money, it does not matter to me. You are definitely liable to pay the GST because it will comes under the definition of online money gaming. Okay, that is the first one. So in order to treat any activity as online money gaming, first one, it should be online game. Second one, the deposit must be pay or deposit money or money's worth. And third condition, there must be expectation to win money or money's worth. Next one, its outcome will depends upon either skill or luck or both. If all these points are satisfied, it is an online money gaming activity. So this online money gaming activity is covered under specified actionable claims ma. Therefore, you are liable to pay the GST. That is the first amendment you need to remember. Okay. So this is the first one ma. So based on the new amendment, what is the position ma? As 7 subsection 2 read with schedule 3 is saying that actionable claims other than specified actionable claims are not liable to pay any GST. So what is meant by the word is specified actionable claims? 6 points are covered. Betting, casinos, gambling, horse races, lotteries, online money gaming. Now these 6 are named as specified actionable claims. On them, definitely you are liable to pay the GST. On them, you are liable to pay GST. That is the point you need to remember. Okay. So the next amendment will be in this case, supply of food and beverages at cinema halls taxable as restaurant service or not, like that is the CBIC clarification. So before going to discuss about this particular clarification, we just need to see the background of this particular need of this circular. Generally, if at all you are able to recollect your supply chapter, in that section 8 will be there. As per section 8, two types of supplies will be there in that: composite supply or mixed supply. If at all it is a natural bundle, it will be called as a composite supply. In that bundle, whatever the supplies that are there. If at all it is a artificial bundle, in those cases, it will be termed as mixed supply. If at all it is a composite supply, then what is the rate that is applicable to? Principal rate will be applicable here. If at all it is a mixed supply, highest rate will be applicable. This is a point already what we know. Okay. And the issue is here. Why I told you this composite supply point is here. The issue for consideration is here. That means the need of this particular circular is here. Many cinema theater operators, apart from movie exhibition, they are also providing the food and refreshments to the customers. That means who comes to see the movie. Let's say take the example of PVP or PVR. Generally, if you observe this PVR, PVP balance sheet, then the much revenue will be not from the sale of movie tickets. The more revenue is from sale of the food. Okay, got the point. So that's why there was the issue that what is the rate we need to apply there? Sir, what is the rate here? Is there any two different rates? Yes, ma'am. The issue is here. If it all, take the example of movie theater. Movie theater comes under the word, exhibition of movie. It is a supply of service. Depending upon the ticket rate, the GST rate will change from 12 to 18%. Okay. With respect to movie theaters, with respect to this, on the movie ticket depends on ticket rate. It may vary from 12 to 18%. It may vary from 12 to 18% with respect to movie theater. Okay, the question is here, these movie theaters may run these refreshment stalls themselves, or they may give it to a third party. That means it can be outsourced. It can be outsourced. So their own food outlets, or they can be outsourced to the some third party. They can run in two ways. They can have their, that means PVP, PVR will have their own food outlets in the premises of movie theaters, or they can be outsourced to some third parties. let's say in PVP, let's take the example that creamstone is there, ma. As far as I remembered, near our town, Vijayawada PVP mall is there. In the PVP mall, creamstone ice cream parlor was there. Here, this ice cream parlor belongs to PVP, or that space was actually outsourced to somebody else. That place was outsourced to somebody else. That means they may give it on a contract to a third party like creamstone. Then those things are known as outsource. Second one, PVP may also have its own food outlets, just like what happens in near the screen. Okay, I told you the creamstone is there within the premises of PVP mall. Okay, but near the screen, movie screen, besides that, some popcorn, coke, all these things are generally, in majority cases, it is sold by the PVP owned food outlets. So it can be of two ways. They can be run by themselves or they may be outsourced to some third party. The question is here, whether this particular food supplies are to be treated as a composite supply which can be bundled with the movie tickets, or this food supplies can be termed as an independent restaurant service. Sir, what is the issue, sir? इतना घबराना क्यों है? तो क्या फर्क पड़ेगा इसमें? Whether it is merged with movie tickets or if at all it is independent activity. The फर्क पड़ेगा इसके टैक्स रेट में. If at all it is a composite supply and it will be taxable as a part and parcel of movie tickets, that means exhibition of movie, the food is also liable to be taxable at the rate of 18%. But if at all it is independent restaurant service, what is the restaurant service tax rate? It can be 5%. So that is the point. So if at all it becomes a composite supply, then automatically on the food items also equal to 18% tax rate will be there. And if at all it is an independent restaurant, in those cases, definitely what is the position? 5% tax rate will be applicable. Okay. And sometimes the customer, that means not the customer, sometimes these this movie theaters may supply the refreshments as a part and parcel of the movie ticket, combo packs. In those cases, obviously, it is liable to be paid along with movie tickets. So that's why the government needs a circular here. Therefore, a CBAC circular was issued regarding this. So what is the scenario 1? Where such food is, that means supply of the food or beverages in a cinema hall is taxable as a restaurant service as long as it is supplied as independent of cinema exhibition service. That means where such food is supplied independent of movie exhibition. Okay, in those cases, it will be treated as restaurant service only. And what is the tax rate that is applicable? 5%. Okay. But where the sale of such food is bundled with cinema ticket, where the sale of that cinema ticket is bundled with, sale of food is bundled with this cinema ticket, in those cases, see, clubbed together. And if at all it is a composite supply, the entire supply will attract GST. What is the rate that is applicable to principal supply? Sir, what is the rate that is applicable to principal supply here? Movie tickets. So, what is the rate that is applicable to movie tickets will be applicable to this food and restaurant, or food services also. At that case, the rate of GST will be 12 to 18% depending upon the movie ticket. So, what the circular says finally? There are 2 points. 1, where food is independent of movie exhibition, it will be treated as restaurant service and taxable at the rate of 5%. If such food is bundled with the movie ticket, In those cases, if at all it qualifies as a composite supply, what is the rate that is applicable to principal supply will be applicable, and rate of GST may be 12 to 18%. This is what this particular circular says. Okay. So the next one is not that much important from the examination point of view. Clarification on the taxability of the shares held in a subsidiary company by holding company. Let's say holding company is having securities or shares in the subsidiary company for the purpose of owning and controlling interest. The question is here whether it amounts to supply of service or not. Answer is no. It is not satisfying the conditions that are prescribed in section 7. Therefore, and it can't be a supply of service. Most importantly, shares and securities are not neither the goods nor the service. Therefore, it is not a supply. There is no need to pay any GST on the shares that is held by the holding company in its subsidiary. Okay. See, securities are neither the goods nor the service. Okay. Purchase of the securities is also neither the goods nor the service. Therefore, the activity cannot be taxed under GST. As simple as that. Generally, this may not be that much important from the examination point of view, but first two amendments you need to remember very well. Okay. Now, we are proceeding to chapter number 3, charge of GST. So, with respect to this charge of GST, so now the third point is tax on the services supplied by a director of a company in his personal capacity. That means what is this a point? Before that, we need to see the background of this particular point. If at all you are able to recollect, services provided by the executive directors shall not be considered as a supply, and whatever the remuneration that is paid to those directors will be taxable under the head salaries, because those things happens in the course or furtherance of his employment. But whatever the remuneration that is paid to the non-executive directors, then we need to check under which section the TDS is going to be deducted. If the TDS is subject to section 194J, then whatever the remuneration that is paid to these directors, definitely it will be covered under RCM, reverse charge mechanism. Okay. The question is here, whatever the services that are provided by the directors are covered under RCM, or only the activities that are done in the capacity of director are covered under RCM. Further, a circular is needed here. What is the thing I told you, ma? Whatever the activities that are done by the directors is covered under RCM, or only the things that are done by the directors in the capacity of director, those things are only covered here, that are covered under RCM. That was what the circular tried to answer here. Okay. So the CBIC now clarifies that only those services that are done by the director in the capacity of director of that company are covered under RCM. Okay. And any other service that is provided by the director in his private capacity, in his personal capacity, just like the services by way of renting of immobile property by the director to the company. It is not the duty of the director to give the immobile property and rent to the company. No? Those things that are done in his private capacity or personal capacity. With respect to them, what is the position? It is not taxable under RCM. They are taxable under FCM. That is the point you need to remember. Okay. Let's say, for example, Mr. Ram is a non-executive director. Let us assume that Mr. Raj, we will take it as Mr. Raj is a non-executive director in Raj Limited. Okay. And from that particular company, he received two payments. First payment is 10 lakhs for his directorship in that company. Second one is he received 25 lakhs for renting of immobile property to the company. Now the question is here, how much amount that is taxable under FCM, how much amount that is taxable under RCM, how much amount that is taxable under FCM and under RCM. Here the first point is here, the 10 lakhs he received in the capacity of the director will be covered under RCM, and on this 10 lakhs, who is liable to pay the GST, ma'am? On this 10 lakhs, definitely as per RCM, company is liable to pay the GST. But whereas with respect to this 25 lakhs, it was done in his personal capacity. If at all it was done in his personal capacity, in those cases, what is the position, ma? It is taxable under FCM but not under RCM. Okay. So 10 lakhs he received in the capacity of the director, that amount is taxable under RCM and company is liable to pay the GST. 25 lakhs he received for renting of immobile property to the company. Definitely it was done in his personal capacity. It is taxable under FCM. Let us assume that Mr. Raj is not a non-executive director and is executive director. In that case, what is your answer? If Mr. Raj is an executive director, then this 10 lakhs is not taxable under GST because it is not received in the capacity of the director, he is an employee there. And what about the 25 lakhs, ma? Definitely on the 25 lakhs, he is liable to pay GST under FCM. For this, answer will not change. Okay. And but for the 10 lakhs, if at all he is executive director, then it is not treated as a supply as per Schedule 3 and no GST is payable at all on the 10 lakhs. But with respect to the 25 lakhs, on that GST would be payable by Mr. Raj under FCM as per the new circular. Okay. Okay, this is what all this amendment is all about. So taxability on the services supplied by the director of the company in his personal capacity, definitely it is taxable under FCM but not under RCM. Okay. Next one. So the next point is, what are the other points that are there in RCM that with respect to this new point that is always here added is Indian Railways. It's a new thing that was added, if you observe, excluding Indian Railways, say this, and here also, okay, this is covered under FCM. I will explain you later on. These people are generally covered under FCM, already you know that. And see this, excluding railways. And for that, what is the point here? That is the thing we need to see with respect to this. So this Indian Railways point, ma, you need to club, okay, even though they are given as separate points, see this, where it is covered here, it is covered here, under FCM, Indian Railways is covered here, because these people are covered under FCM. I'm just telling you the overview, later on we will have an in-depth discussion now. And see, this one excludes Indian Railways under RCM, that's why it is covered under FCM. And apart from this, in exemptions chapter also, the word Indian Railways was included. And see this, Indian Railways was included here. That means this entry is not applicable. That means exemption was withdrawn with respect to Indian Railways, see, excluding. Okay, we need to club these two things, ma, in order to get a better idea. See this, here also, this entry, nothing will not be applicable to Indian Railways. And this 5,000 exemption is not also applicable to Indian Railways. So this is the point you need to keep focus, ma. So in this, so many points merging, actually there was one amendment. So you need to keep focus on all these areas together. So that's why I'm telling you the point in detail now. What is the existing provision here? General rule is services, that means what generally the Indian Railways will do, ma? What the Indian Railways generally will do? What the Indian Railways will do? Generally, they may be involved in transportation of passengers. This is first one. And second one, they may be involved in transportation of goods. Okay. And they may be involved in renting of immovable properties. This is the third one. Or they may be involved in any other services. Okay. These are the four things generally the Indian Railways will do, ma. Indian Railways will provide the services of transportation of passengers. Indian Railways will provide the services of transportation of the goods, and they may be involved in renting of immovable property, or they may be involved in any other service. Okay. The first point is, now what is existing provision with respect to transportation of passenger by Indian Railways? Exempt. And transportation of the goods by rail from one place to another place, exempt or taxable? It depends on, just wait, 2 points here. If at all it is a specified good, it is exempt. And if at all it is a non-specified good, definitely what it will be, ma? Taxable. Taxable under FCA. Okay. And if at all it is a renting of immovable property, that means their warehouses or their places can be given on rent. If at all it is like that, with respect to any renting of immovable property services provided by Indian Railways, then we need to check here. If at all they are provided to government or non-business entity, then definitely it is exempt. If at all it is provided to government or non-business entity, it is exempt. And if at all it is provided to a registered business entity, then it is taxable under RCM. And if at all it was given to unregistered business entity, it is taxable under FCM. Okay, and same point will be applicable to this fourth point also. Any other service. With respect to any other service, first one is, if at all it is provided to government or non-business entity, it is exempt. If at all it is provided to if at all they are provided to registered business entity, then it is taxable under RCM. If it all is an unregistered business entity, then it is exempt. Okay, this is the present existing provision with respect to Indian Railways. Indian Railways is nothing but also a government now. That's why what is the point here? See this. Indian Railways first will do transportation of passengers. Generally, transportation of passengers is exempt. Sorry, just forgot to write here. What are the exceptions, ma? AC and first class. Those two are taxable under FCM. Okay. With respect to transportation of the goods by Indian Railways, specified goods like what we can say, daily necessities like pulses, milk, rice, newspapers, defense items, like that few other items are there now. With respect to those specified goods, it is exempt. If at all they are non-specified goods, they are taxable under RCM. Sorry, they are non-specified goods, they are taxable under FCM, forward charge mechanism. And if Indian Railways are providing service of renting of immovable property to the government or non-business entity, it is exempt. To the unregistered business entity, taxable under FCM. To the registered business entity, it is taxable under RCM. Any other service, just like this, government or non-business entity, exempt. Registered business entity, it is taxable under RCM. And unregistered business entity, it is exempt. This is the present existing provision. Okay. And another point, any service that is provided by the government, definitely we can say it as a fifth one, where consideration is less than or equal to 5,000 rupees, it is exempt. That means whatever the service the government will do, for that consideration is less than or equal to 5,000, it is exempt. These are the 5 points. But now what is the amendment that was there? So few points are linked with RCM, few things are actually exempted, few things are taxable under RCM, FCM and exempt. All the 3 areas it is covered here at present. Now what is the amendment? The amendment is here with respect to first case, transportation of services and transportation of the goods, that means this one, transportation of passengers, and second one, transportation of goods, there is no amendment. These 2 things, there is no amendment. No amendment. Okay. The amendment just came in point number 3, 4 and 5. Now the amendment is there in point number 3, 4 and 5. This is point number 3, this is point number 4 and this is point number 5. The amendment is there in these 3 points only, 3, 4, 5. Okay. So amendment is there in these points only, these 3 points. Okay. Now what is the amendment that is there? Any service by the Indian Railways. So what is the point that is there? I am clubbing all those things because they are scattered in 2 chapters. One is exemptions and second one is RCM. I am clubbing those things and telling you, so it is better to take the notes instead of searching those things in the material. You need to search them everywhere, which is there in chapter number 3, some point, okay, blah, blah, blah. You need to see that. And again, you come back to these exemptions, you need to check. That's why copying, while actually I am telling you, it is better to copy that. Okay. The amendment is, any services by the Indian Railways other than transportation of passengers and goods shall be taxable under FCM, irrespective of the recipient. What is the present point now? Any services by the Indian Railways other than transportation of the goods and passengers shall be taxable under FCM, irrespective of the recipient. Got the point? That means with respect to renting of immovable property, with respect to any other service, with respect to where the consideration is less than or equal to 5,000. This point now will not be applicable to Indian Railways. Even though the consideration is less than or equal to 5,000, it is taxable for Indian Railways. And second one, with respect to renting of immovable property, what is the present point? It is exempted now up to this extent. It is no more exempted. It is also taxable. And this is taxable, but this one is taxable under RCM now previously. Now it will be covered under FCM. It remains as it is. And in the same way, previously it is exempted, this is exempted. Now these things are taxable. Okay. But all the things are taxable now under FCM. That is the point. I just wrote the amendments in yellow color. You can observe there. With respect to point number 3 previously, renting of immovable property to the government or non-business entity, previously it is exempted. but now it is taxable under FCM. Not only this one, any other service that is provided by the Indian Railways are taxable under FCM. RCM was removed for these services. Okay. So what is the point here? Renting of immovable property to the government or non-business entity previously exempted, but now it is taxable under FCM. Previously, renting of immovable property to unregistered business entity taxable under FCM, now also taxable under FCM, no change. And renting of immovable property to the registered business entity previously taxable under RCM, but now taxable under FCM. This is third point. And fourth point, with respect to that fourth point, any other service to the government or non-business entity previously exempt but now taxable. To the registered business entity previously taxable under RCM, now under FCM. Previously to the unregistered business person is exempt, now taxable. Now all the three services are taxable under FCM. And the fifth condition, where the consideration is less than or equal to 5,000 is exempt, is no more applicable to Indian Railways. Even though the consideration is less than or equal to 5,000, definitely it is taxable for Indian Railways. So this is the point you need to remember by clubbing these two, exemptions and RCM. Even though it was given in two separate chapters, you need to analyze them in this manner. Okay. So this is amendment, you can check there. So second one, 5A. So now we need to see the exemption, amendment with respect to 9 subsection 5 ECO. And with respect to this particular ECO 9.5, now its scope is somewhat restricted. But before going to discuss about that one, what is existing provision with respect to 9.5? Generally 9.5 is applicable only with respect to ECO of services. In that, not to all the services. At present under 9.5, only how many services are covered there? With respect to 9.5, how many services are covered? Only 4 services. What are those 4 services? Passenger transportation. Second one, hotel accommodation. Third one, housekeeping service. Fourth one, food aggregators like Zomato or Swiggy. These are the 4 people who are covered under 9 subsection 5. Okay. And in that, there was an amendment with respect to transportation of passengers. That means remaining 3 remains as it is. The amendment came in the first service that is covered under 9 subsection 5. That is services by way of transportation of passengers by a radio taxi, motor cab, maxi cab, motorcycle or omnibus or any other motor vehicle. That is the previous point. Okay. Now it was amended like this. Seema, what is the amendment? Services by way of transportation of passengers by a radio taxi, motor cab, maxi cab, motorcycle or any other motor vehicle except omnibus is the amendment. Previously, omnibus is also included in this 9.5. But now what is the amendment, Services by way of transportation of passengers by a radio taxi, motor cab, maxi cab, motorcycle or any other motor vehicle except omnibus. So now this point was divided into 2 parts. See this. This omnibus kept outside. This is point number 1. Now this is point number 2. Services and further a new category was introduced. Services by way of transportation of passengers by omnibus except where the person supplying such service through ECO is a company. That means now you can divide this particular point into 2 types. So previously transportation of passengers by ECO which is covered under 9.5. Now it will be divided into 2 parts. Now it is divided into 2 parts. One is passenger transport services to others. Passenger transport service through omnibus. Now, with respect to this service, passenger transportation service that is provided by radio taxi, maxi cab, motorcycle, in all these cases, ECO is liable to pay the GST whether the actual supplier is registered or unregistered. In all the cases, ECO is liable to pay the GST. That means whether the supplier is a registered one or an unregistered one, in all cases, who is liable to pay the GST? ECO is liable to pay the GST. But whereas with respect to this case, passenger transportation service through omnibus, it was divided into 2 points here. It was divided into 2 points. One is, if the supplier is a company, supplier means omnibus supplier. If the supplier is other than company. If the supplier is company, in that case, who is liable to pay the GST, ma'am? Supplier will pay GST here. And if at all, the supplier is other than registered person, other than company, then ECO is liable to pay GST. So now this point was divided like this after amendment. So passenger transportation service through radio taxi, motor cab, maxi cab, motorcycle, except omnibus, in all these cases, ECO is liable to pay the GST whether the supplier is registered or unregistered. But if the passenger transportation service through is omnibus, then we need to check who is the supplier. If the supplier is a company, supplier himself will pay the GST. If the supplier is the other than company, in those cases only, ECO is liable to pay the GST. That is the point you need to remember. Okay, this is the amendment, ma. So now there ends this particular topic. The next chapter amendment is with respect to place of supply. That is so that is amendment we need to see now. So the amendment is there with respect to place of supply. Generally, if you observe place of supply, there are 2 points with respect to supply of the goods. One is section 10 and second one is section 11. I think 11 is not in your syllabus. With respect to section 10, if you observe there, so with respect to place of supply, first thing is 10(1)(a). Whenever there is a physical movement of the goods is involved, the place of supply will be the place where the goods are delivered. POD, place of delivery will be the POS. Okay. And another one is there, 10(1)(c), which says that if at all there is no physical movement, then place of supply will be the place of location. The place where the goods are there at the time of delivery, that one will be the place of supply. So 10(1)(a) says if at all there is a physical movement of the goods, POS will be the place of delivery. As per 10(1)(c), there is no physical movement, then place of supply will be the place where the location of the goods. Okay. Now what is the amendment that is there? Now another new section was created, that is named as, a new section was created that is named as 10(1)(ca). A new section was created, 10(1)(ca). As per this 10(1)(ca), that means notwithstanding anything contained in 10(1)(a), and 10(1)(c). That means 10(1)(c) has a overriding effect on these two sections. POS will be as per 10(1)(ca). This is C. Okay. I will write once again, no issue. Oh, sorry. 10(1)(ca). As per 10(1)(ca), if as per 10(1)(ca), if the recipient is a unregistered person, that is, the supply is a B2C supply, then POS is equal to address on the record. If it is not available, then POS is equal to location of supplier. This is a new point that was created, 10(1)(ca). If the recipient is unregistered, that is, if at all it is a B2C supply, then what is the POS? POS will be address on record of that recipient. If address of that particular recipient is not available, then location of supplier will be the POS. Okay. So the important point is here, sir, when this particular 10(1)(ca) is applicable, if you observe 10(1)(a) or 10(1)(c), physical movement was involved, physical movement was not involved, you need to check all these things. Okay. That means generally now these two are restricted their usage for B2B technically, even though it was not specified anywhere, these 2 points. That means if at all it is a B2B supply, then you need to check physical movement was involved, 10(1)(a) is applicable. No physical movement was there, 10(1)(c) is applicable. Now, this 10(1)(a) and 10(1)(c) are restricted to B2B supplies only. Now, in this 10(1)(ca), unlike in case of B2B supplies, we need to check whether physical movement was involved or physical movement was not involved. There is no need of checking the movement in case of B2C supplies. Here POS will be always based on the location of recipient or based on the location of supplier. Okay. That means if at all the recipient is an unregistered person and if at all it is a B2C supply, then place of supply will be address or record of the recipient. Okay. Of recipient. If address is not available, then location of supplier will be the POS. That is the point you need to remember now. Now 10(1)(a) and 10(1)(c) is restricted to B2B supplies only. Okay. So this is a place of supply amendment. With respect to this, you need to remember. Say this address on record is available. That address on record is not available. Location of the supplier will be the POS. Okay. And advertisement sector, not actually important from the examination point of view. So this is not that much important from the examination point of view. That's why I tell you the summary of this particular point. So with respect to this, now we are talking about the POS in relation to advertisement services. In that there is one amendment. Now we will see that. Generally, if you observe, there are 2 sections. Majorly, there are 3 sections that are involved therein. So, one is, first one is 1214. Generally, section 1214 deals with advertisement services. 1214 deals with advertisement services. As per 1214, anybody remembers what is the POS? Sir, why there is a point that is need for insert of this one circular is 1214 will decide the advertisement services that are provided to the government. It was clearly given. What is the place of supply? That means to provide it to government, one state, that state will be the POS. If it all it is provided to more than one state, in those cases, what is the position? Proportionate basis. We need to compute the place of supply like that. But if at all these advertisement services are provided to non-government recipients, there is no specific rule in this section 1214. So that's why CBIC circular will clarifies that particular thing. Okay. The issue is here, generally advertisement companies often involved in procuring the space or space on the hoardings or the billboards that are mounted on a particular building or at a particular land, okay, in different states, generally from various suppliers, or sometimes we will call them as vendors also, okay, for providing advertisement services to their clients. Because in order to give some advertisement, there must be some billboard or hoarding that must be there now. Generally, these hoardings or these billboards are of some third party vendors. From that particular third party vendor, generally these billboards or the hoardings will be of third party vendors. Okay. Generally, this particular advertisement agency will take them on rent basis from these particular third party vendors, and on the billboards they will do the service to their clients, advertisement service. Okay. The question is here, how to decide the place of supply with respect to these type of cases. One arrangement that can be possible is, let's say, here the services can be divided into two types. One is arrangement 1. With respect to arrangement 1, this particular billboard or the hoarding belongs to third party, and on that billboard advertisements were done. In that case, 12.3 will come into C, that is services in relation to immovable property. So, in that case, location of hoarding or billboard will be the place of supply. A billboard or hoarding belongs to the third party, and on that billboard ads are done. In that case, instead of 12.14, what is the section that will be applicable? As per section 12.14, 12.3 will come into C. As per 12.3, it is in relation to immovable property. Then the place of supply will be the place where the immovable property was located. Where the immovable property was located. So, where the immovable property was located, the location of the hoardings or billboard will be the place of supply. And what is second arrangement? The second arrangement will be arrangement 2. Billboard or that holding belongs to client only. That means it already that particular, say for example, one hospital is there. On that hospital terrace, there is a big billboard. Now, on that billboard, the particular hospital wants to give its own advertisement. Got the point? Billboard belongs to the hospital because it was there on the terrace of the hospital. Okay. Now, what the hospital wants, there must be some attractive advertisement that is needed to be designed by this advertisement agency. Okay. Here, billboard or hoardings belongs to the client only. On that billboard, advertisements were there. It's or given. In that case, what is the place of supply? With respect to this arrangement 2, the place of supply should be decided by 12 subsection 2, which is a residuary entry, not as per 12.3. Okay, ma. That means 12.3 deals with immovable property. Here, Immobile property was not taken on a rental basis, ma, because that particular billboard or holding already belongs to the client. In that case, what we are doing, you are providing only the service there. In that case, definitely 12.3 will not be applicable. The place of supply is needed to be determined as per 12.2. As per 12.2, definitely what is the position? Location of the recipient will be the place of supply. That is, so the LOS will be, sorry, the POS will be location of recipient generally. You can study in-depth story of 12.2 that was given in your material. Okay, so this is the amendment with respect to place of supply. Now the next thing we need to see is exemptions. Already I covered all these exemptions related amendments here. Okay, already we covered. And this is another point you need to remember, new exemptions that was introduced. With respect to these new exemptions, and the next point is the new exemption that was there is my simple one. Previously, services provided by governmental authority. Services provided by governmental authority in relation to any panchayat or municipal functions are exempt. But any services that are provided to governmental authority, it is taxable. Okay, ma. Previously, what is the point, ma? By governmental authority in relation to any municipality or panchayat functions, it is exempt. But any third party is providing services to governmental authority, definitely it is taxable. But now, if any third party is providing services to the governmental authority in relation to these activities, it is exempt, like water supply, public health, sanitation, solid waste management, slum improvement and upgradation. With respect to these activities, if any third party is providing services to governmental authority, definitely is it exempted or taxable, ma? It is exempted. As simple as that. The next one is value of supply. So with respect to this value of supply, ma, so previously if you observe, practically this particular amendment is there in time of supply, but the chapter remains the same, time and value of supply. If you observe time of supply, if any advance is any advance is received in relation to goods, you are not liable to pay any GST at the time of receiving the advance. If at all any advance is received in relation to service, definitely you are liable to pay the GST at the time of receiving the advance. I think you know this point. With respect to goods, at the time of receiving the advance, we are not liable to pay any GST. With respect to services, whenever we receive the advance, we are liable to pay the GST. But the amendment is here. This particular goods point is excluding registered persons making supply of specified actionable claims. Now, what is the effect of or impact of this particular amendment? Now, in case of supply of actionable claims, supply of specified actionable claims. Sir, what are these specified actionable claims? I think we had a discussion on it previously, like gambling, betting, lotteries, casinos, horse races, online money gaming. These 6 are treated as specified actionable claims. With respect to these specified actionable claims, now what is the impact, ma? In case of supply of these specified actionable claims, time of supply will be triggered if the payment for the same is received by the supplier in advance. That means simply, even though it is a supply of the good, because actionable claim is a good, if at all it is a good, on the advance we are not liable to pay GST. But if that good is a specified actionable claim, if that good is a specified actionable claim, in that case, at the time of advance itself, time of supply will be triggered and you are liable to pay the GST. Simply what we can say is here. Okay, fine. So, With respect to time of supply, now what is the point, ma'am? With respect to time of supply, with respect to goods, previously you are not liable to pay any GST at the time of receiving the advance. But now it is divided into 2 points. Specified actionable claims, other than specified actionable claims. If at all it is the specified actionable claim, even though it is the good, definitely you are TOS will be attracted at the time of advance. If at all it is other than specified actionable claims, no time of supply will arise at the time of advance. That is a point you need to remember after the amendment. With respect to specified actionable claims, time of supply will be triggered at the time of receiving the advance itself, even though it is a good. But now, with respect to other than specified actionable claims, respective goods, the present position will remain as it is. No time of supply will arise at the time of receiving the advance. That is the point, ma'am. Next one is a registration. It is naam ke vaste. Few amendments are there. With respect to this point, if you observe that generally when the physical verification is required, generally when the physical verification of a place of business is required, generally the physical verification of the place of business is required when if Aadhaar authentication was not opted, Aadhaar authentication was opted, but we are unable to link with Aadhaar. Third one is if at all the government risk assessment system wants to do the physical verification. And fourth one, even though everything is good, if the department wants to do the physical verification. These are the 4 cases. These are the 4 cases, okay, where the physical verification can be done. What are the 4 cases where the physical verification can be done, ma? First point is you are not opted Aadhaar authentication. Second one, you opted the Aadhaar authentication, but link is not working or something like that. Third one, based on risk assessment. And fourth one, if everything is good, but still the department says a dil mange more. In all these 4 cases, physical verification will be done. But if at all physical verification is there, what is the time period, ma? Generally, previously, there is no specific time limit to upload the physical verification report on the GST common portal. Everything from physical verification, verifying the documents, everything should be done within 30 days. Okay. Okay, within 30 days. The rule is simple. The present existing provision simply says that once the physical verification was done, within 15 working days, it should be uploaded on GST website. That is the only criteria at present that is there. Whenever physical verification was done, whenever physical verification was done, then its report needed to be uploaded within a period of 15 days. That is the only thing that was there. But now the government came up with the framework of time also with respect to physical verification report when it is needed to be uploaded. When it is needed to be uploaded, ma'am? When it is needed to be uploaded? Physical verification will be done. Physical verification will be done. Physical verification report must be uploaded at least 5 working days prior to the completion of the time. That is the point you need to remember. Okay. So what is the point here, ma? Here the point was divided into 2 types. I will tell you a simple story here also. First one is the form number will be REZ 30, ma. Generally you are not required to remember the form number. This is the report that is needed to be uploaded by the proper officer. Okay. So now the first amendment that came into scene is with respect to this physical verification. Previously, in order to do the physical verification, it should be done in the presence of applicant or in the presence of registered person. But now it was changed. Now physical verification can be done by the proper officer even without the presence of registered person. That is the first amendment in physical verification. What is the first amendment? Now physical verification can be done by the proper officer even without the presence of registered person. And second one, with respect to time limit, now it can be divided into two types. Physical verification is going to be done before grant of registration certificate. Second one, physical verification is going to be done after the grant of registration certificate. These are the 2 points you need to remember here. So when the physical verification is going to be done? Physical verification is going to be done before grant of registration certificate. In that case, now there is an amendment that at least 5 working days before to the 30 days time frame from the date of submission of application. So what is the present point? At least that means with respect to this point, at least 5 working days prior to the completion of 30 days time period from the date of submission of REC 01. That means previously you can physical verification can be done or report can be uploaded anytime before 30 days. But here now it was confined to 25 days practically, because at least 5 working days prior to the completion of 30 days, you should upload the physical verification report on the GST portal. But whereas here, if at all physical verification is going to be done after the grant of RC, then there is no such requirement. From the date of physical verification, it should be uploaded within 15 working days. From the date of physical verification, it should be uploaded within 15 working days. That is the point you need to remember. Okay. The amendment is there only in this point. That is the thing you need to remember here. And next one is here with respect to bank account, ma. So with respect to rule 10A, what is the previous point, ma, with respect to rule 10A? What does this deals with? Submission of bank details. What is the time limit for the submission of bank details previously? From the date of RC within 45 days or the first GSTR 3B due date, whichever is earlier. On or before that particular date, what should be done, ma? On or before that particular date, what shall be done? Bank account details are needed to be submitted to the department. Otherwise, your RC can be cancelled. Okay. Now, what is the amendment in this? There is a time prescribed under Rule 10A was amended, ma. Now, the point is here. From the date of RC, 30 days. From the date of RC, 30 days or actual date of filing of GSTR 1, whichever is earlier. Whichever is earlier. That is the cutoff date to submit the bank details to the department. Previously 45 days time was there, now it was reduced to 30 days. So from the date of RC, 30 days or actual date of filing of GSTR 1, whichever is earlier, that is the cutoff date to submit the bank details to the department. If those bank details are not submitted within that particular time, what is the position, ma? Definitely your RC can be cancelled also subsequently. Okay. So the time period was changed with respect to Rule 10A. What is the old time limit? From the date of RC, 45 days, or the due date of filing first GSTR 3B, whichever is earlier. But now it was changed to from the date of RC, 30 days, or actual date of filing of GSTR 1, whichever is earlier, that is cutoff date to submit the bank details. Okay. And the second point is here, this is not a new point, ma. Now it was included this point also. This is so this is first amendment with respect to registration, ma. And second one is if these details are not furnished, that means non-furnishing of information as per Rule 10A. What are the consequences, ma? First point is suo motu cancellation of registration by the proper officer. Already we know that. Second one, now there is a provision for automatic system based suspension of GST registration if the information under Rule 10A is not submitted within the time limit. And in the same way, if the information is not submitted as per Rule 10A, then your e-way bill generation can be blocked, as well as blocking of GSTR 1 will also be followed. Okay. What is the point here, ma'am? Just you can see here. That means what is Rule 10A time limit now? Rule 10A time limit will be first one, from the date of registration certificate, 30 days, or actual date of GSTR 1, whichever is earlier. That is the cutoff date to submit the bank details to the department. If at all it is not followed, any default is there. Now what are the consequences? First one, cancellation of registration under section 29 subsection 2. Already you know that one. Second one is automatic suspension of registration. Third one is blocking of GSTR 1 and invoice furnishing facility. So these are the consequences if any default occurs. That is the point you need to remember. As simple as that. Your registration can be cancelled, automatic suspension of registration, and blocking of GSTR 1 and invoice furnishing facility if the bank details are not submitted within the time frame of Rule 10A. That is the point you need to remember. Okay. And the next point is GSTR 1. This story will have a discussion later on. So this point was actually given in that particular concept, but practical enforcement will not be there with respect to that. Simply what we can say is, if at all there is any difference between, simply just I will write here. This topic is actually in relation to Rule 88 CMA. Actually, this topic is in relation to Rule 88C. So this point is basically with respect to Rule 88 CMA. That means if at all there is a difference between, GSTR 1, that means the supplies that are reported in GSTR 1 is more than the supplies that are reported in GSTR 3B, or the ITC that is reflected in GSTR 3B is more than the ITC that is reflected in GSTR 2B. In those cases, Rule 88C generally may come into scene. Okay. when this Rule 88C will come into scene. The proceedings and recovery in case of differences between the outward supplies in GSTR 1 and outward supplies in GSTR 3B. That is the first one. Okay. Generally, if at all there is the supplies that are specified in GSTR 1 is more than the supplies that are specified in GSTR 3B, in those cases, what is the position, ma? Definitely the difference will be intimated to the person, and that means for that a show cause notice will be issued, and for that show cause notice the person must give a reply within 30 days. Okay, if no reply was received by the registered person, or if the reply is not satisfactory, in those cases your RC can be cancelled. Okay, if at all we received a proper reply, then all the proceedings are deemed to be concluded. Okay. So now second point, what is the 2 points, ma? There are 2 consequences here. One is already that was there in the law. Consequence 1, the supplies that are there in GSTR 1 is more than the supplies that are prescribed under GSTR 3B. Supplies that are more than GSTR 1 is more than GSTR 3B. Okay, in those cases, definitely the first one is a show cause notice will be sent to you. For that show cause notice, you must give a reply within 30 days. If the reply is satisfactory, proceedings are deemed to be concluded. If the proceedings are, that means if the reply is not satisfactory or no reply, in these cases, your RC will be cancelled. This is the first one already that was there. Okay, now the second one, consequence 2 is recovery as per section 79. But for this, there is no effective date that was specified, ma. That's why even though it is there in this particular case, recovery, that means what is this recovery here? That means a show cause notice will be issued to that particular person. For that show cause notice, the person either pay the GST or give a reply. That means here show cause notice will be there. For that you need to give the reply 7 days. If the either reply should be given, pay the tax or give the reply. Reply is satisfactory, then proceedings are concluded. Okay. Neither paid the amount nor reply was given. Okay. In that case, straight away, instead of cancelling the RC, okay, RC may be cancelled as per the consequence. That means previously there was a provision for cancellation of RC also. Okay, RC was cancelled. What is the loss to the SC there? He will not pay the tax now. Now that's why second consequence were added there. Now, even though your RC is going to be cancelled, that is the consequence 1. And consequence 2 is, what is the amount that is there? It will be recovered as per section 79. That is the point. So, when GSTR 1 sales, simply I am using the word sales, but the actual word is supplies. For the sake of simplicity, I am using that word. GSTR 1 supplies are more than GSTR 3B supplies. Consequence 1. If a reply is not satisfactory, your RC will be cancelled. Consequence 2. Then as per 79, recovery proceedings will be started and that difference amount will be collected from that party. Okay. And now another new rule was inserted here, that is Rule 88D. What does Rule 88D deals with, ma? When this Rule 88D will be applicable, ma? The ITC claimed in GSTR 3B is more than ITC reflected in GSTR 2B. ITC claimed in GSTR 3B is more than ITC reflected in GSTR 2B. In those cases, what is the position, ma? Rule 88D will come into scene. Previously, 88C, supplies indicated in GSTR 1 is more than the supplies indicated in GSTR 3B, Rule 88C will come into C. If ITC claimed in GSTR 3B is more than ITC reflected in GSTR 2B, in those cases Rule 88D will come into C. Okay. As per Rule 88 also, if at all this happens, two consequences will be there. Consequence 1. What is consequence 1, ma? First one, system-based suspension of your registration certificate. That means automatic suspension of your registration. There is no manual process will be there, ma. Once the system, GST Common Portal finds that particular thing, automatically your RC will be suspended first. And second one, show cause notice will be issued to you. For that show cause notice, you must give a reply within 30 days as usual. If reply is satisfactory, proceedings are deemed to be concluded. If the reply is not satisfactory or reply not given, in those cases, what is the position, ma? RC cancellation. Okay. This is same 88C and 88D are same, but what is the difference is 88C is applicable. 88C is applicable rule number when supplies in GSTR 1 is more than GSTR 3B. Rule 88D is applicable. ITC claimed in GSTR 3B is more than ITC reflected in GSTR 2B. Except that remaining province remains the same. And consequence 2 is here. Consequence 2, as usual, show cause notice will be given. For that show cause notice, within 7 days, either you need to pay the difference amount or give a proper reply. Then proceedings are deemed to be concluded. Otherwise, what will follow, ma? Section 73 or 74 will be followed, thereby recovery proceedings will be initiated. And along with that, your e-way bill GSTR 1 and invoice furnishing facility can also be blocked. These are the 2 points not relevant that much from the examination point of view, but you need to remember sometimes there is a possibility. What are these 2 rules, ma? Rule 88C. When this Rule 88C will come into C, GSTR sale supplies in GSTR 1 is more than supplies in GSTR TB. Okay, and this one you can ignore here. Okay, just wrote, sorry. Supplies in GSTR 1 is more than supplies in GSTR 3B. This Rule 88C. Consequence 1, your RC can be cancelled. Consequence 2, as per 79, recovery proceedings will be initiated. Rule 88D. ITC claimed in GSTR 3B is more than ITC reflected in GSTR 2B. Then consequence 1, your RC can be cancelled. Consequence 2, 73, 74, recovery proceedings will be initiated. Okay, as simple as that. Not that much discussion is needed on this. Okay, see all these things already we completed here in simple terminology. Okay. And after completion of that one, now the fourth point will be, third point we just completed. The fourth point will be simple, ma, with respect to revocation. So with respect to revocation, what is the position, ma? Previously, if you observe with respect to revocation, that means section 30. With respect to section 30, revocation of cancellation. Revocation of cancellation. Initially, what is the time limit for the application, ma? 30 days. Further, you can ask additional commissioner or joint commissioner for another 30 days. After that, it can be extended by the commissioner for 30. The total number of days that is there to make the application for revocation is 90 days previously. But now, after the amendment, the position is initially to make the application, the time limit is 90 days and further it can be extended 180 days by the commissioner. Total it will be 270 days now. That is the amendment with respect to revocation. Previously, initially the time limit to make the application is 30 days. After that, extension can be granted by the additional or joint commissioner for another 30. And after that also you need some extension, it can be granted by the commissioner. The total number of days will be 90 days. But now, initially the time limit to make the application is 90 days. And after that, extension can be granted by the commissioner for a further period of up to a maximum of 180 days. The total time period now become 270. That is the amendment you need to remember. Okay. This is the fourth one, ma. See this, the initial time period is 90 days. Further, it can be extended to another 180 days by commissioner or his authorized persons. Okay, that is the point you need to remember. Okay, ma? And in the same way, if you observe that, if you observe section 24, what is section 24 deals with, ma? Compulsory registration. With respect to compulsory registration, the procedure is simple. Even though your aggregate turnover does not exceed, but still you are required to take the registration. In that, so many number of people are covered like RCM recipient, ECOs, and interstate supplier of the goods. Now, in that section 24, the person who is supplying online gaming from outside India to a person in India is now covered under section 24. That means the person who is supplying online money gaming services from outside India to a person within India, in that case, the supplier is required to take compulsory registration as per section 24. That means section 24 now added one more point. The person who is supplying online money gaming service from a place outside India to a person in India is required to take compulsory registration. But he is not required to give his PAN and the statement because he is from outside India. Na? That's why you cannot ask him for PAN and state where he is going to take registration. So, generally, if at all you are taking any registration, PAN and state where you are applying for registration is compulsory. But for this person who is supplying online money gaming services from outside India, he has been given exemption from giving their PAN number as well as the state where they just want to start the business or where they just want to take the registration. See, that was the amendment, ma. See, except NRDP is not required PAN, TDS deductor, TCS collectors are not required to submit their PAN, ma. Okay. And in that one new point was added, this is this fellow. Okay, online gaming services, YDR service providers, they are not required to declare their PAN and state. See, except these people, remaining people are required to submit the PAN as well as the state where are going to take the registration. But these four people, previously there are three people, but now there are four people that are granted exemption or relaxation from submitting their PAN as well as the state where they are going to take the registration. Okay. Next point is tax invoice, debit notes and credit notes. With respect to this point, previously with respect to e-invoicing, what is the threshold limit? 10 crores. But now the 10 crores was reduced to 5 crores. That means starting from 17, 18 onwards, any registered person aggregate turnover is more than 5 crores, e-invoicing is required. That means the scope of invoicing was increased. And next one is clarification on e-invoice related issues. In that if you observe, even though your turnover is more than the threshold limit, in few cases you are not required to issue the e-invoice like GTA, passenger transportation, multiplex movie theaters, like that. In that, local authority and government is also covered. Okay, the question is here, whenever government is involved, invoicing is not required. Or if the supplier is the government or government department, then only invoicing is not required. The clarification was given here. If the supplier is government department, then only e-invoice is not applicable. If the recipient is government department, then the concept of invoicing is applicable. Okay, ma'am. See, person supplying them shall be generate the invoice. That means third party to government department invoicing is applicable because here the government department is the recipient. Okay, if the government department is the supplier, then invoicing is not applicable. That is the concept you need to remember. Next one is, okay, ma. Generally, ma, if you observe this B2 particulars of tax invoice, which is there in rule number 46. In that rule number 46, generally, what is the thing you need to write there? What is the thing you need to write, ma? Generally, name, address, and GST number of the supplier, date of issue, serial number. If the recipient is a registered person, then name, address, and GST number of the recipient. If the recipient is an unregistered person, value is more than 50,000, name and address mandatory. Value is less than 50,000, state is actually optional. Like that we discussed it now. But now, with respect to these cases, what are the cases, ma? Where actually state is required? If at all is a OIDR supplier, or supplies are done through ECO, or if at all it is an online gaming service, even though the value is less than 50,000, state is mandatory. Name of the state, ma'am. Not everything is mandatory there. Okay. What is the thing that is required? So, if at all the value is less than 50,000, no information is required, ma'am. But with respect to OIDR services or supplies that are done through ECO and online money gaming services, with respect to these three, even though the value is less than 50,000 rupees, name of the state is mandatory, not the total address. Name of the state is mandatory. If at all is a OIDR supplier or the supplies through ECO or online money gaming services, in these three cases, even though the value is less than 50,000, still name of the state is mandatory. Okay. Next point is, so the next topic is, we need to see the amendment with respect to payment of tax. So with respect to payment of tax, there is one circular that was issued with respect to clarification on charging the interest under section 53 in case of wrong availment of IGST credit and reversal thereof. With respect to that, the issue is like this. In case of where IGST credit wrongly availed, unutilized, and IGST and the balance in electronic credit ledger balance fallen below the amount of wrongly availed ITC of IGST, whether interest will be levied if IGST, CGST and SGST total taken together does not falls below the wrong availment of utilization. That was the issue. Because IGST is going to be used for every payment of GST. Na? That's why that will be fair to take if all the total ITC's balance is below the IGST wrongly utilized, then only interest is needed to be charged. Yes, that was the clarification that was given. IGST can be utilized to pay all the liabilities, IGST, CGST and SGST. Total credit shall be considered to check whether the balance in credit ledger is fallen below the incorrect availment and utilization. See the example. This is the opening IGST IDC. This is IGST IDC that was wrongly availed. Okay, this is correct IDC that was availed. Okay. In this case, correct IDC availed of CGST and SGST 25,000. This is IGST liability and this was IGST that was used. Okay. So in this case, what is the wrong availment of IDC, ma'am? IGST 40,000. Okay. Here IGST balance was reduced to 10,000. Sir, in this case, is it possible to levy the interest on the shortfall of that 30,000? Answer is no. Because we need to take total amount of closing balance. 10 plus 25 plus 25, total balance is 60,000, which has not fallen below the incorrect IDC that is availed. Therefore, no interest is charged. And keep it in mind, this GST compensation cess balance will not be considered while computing the closing balance of this particular amount for this purpose. Okay. So, what is the summary of this point, When the IGST ITC was wrongly availed and utilized, okay, in that case, there will not be any interest liability. If the balance in electronic credit ledger under the head IGST, CGST and SGST all taken together does not fall below the ITC that was wrongly utilized or availed, then no interest will be charged. That is the point you need to remember, So the summary is, in order to check wrong utilization of ITC, not only the closing balance of IGST ITC shall be considered, the total balance of IGST, CGST and SGST are needed to be considered. That is the point you need to remember. Okay. Another thing, even though it is not covered, actually we covered the most important things from the examination point of view. Few things are left out actually. In that, one thing you need to remember is with respect to composition scheme. If at all you observe with respect to composition scheme, if you observe with respect to composition schema, the person cannot make any supplies. The person cannot make any supplies through ECO. Then he is not eligible. That means if at all he is making any supplies through ECO, he is not eligible for the composition scheme. But now it was amended, Now the supplier of the goods can make supplies through ECO. Okay. But keep it in mind, only intrastate supplies can be done. But keep it in mind, what is the thing they can do? Only they can do intrastate supplies. So now remember this point. Now the supplier of the goods can make the supplies through ECO, who is required to collect the TCS. Okay. But he can do only intrastate supplies only. He cannot do any interstate supplies, and ECO shall not give any permission to do the interstate supplies. Okay. And in the same way, in registration chapter also, another point is there with respect to that particular point. If at all you observe with respect to registration, compulsory registration, persons who are making supplies through supply of the goods through ECO is required to take the compulsory registration. Any person who is making the supplies through supply of the goods through ECO is required to take the compulsory registration. So now any person who is supplying the goods through ECO, any person who is supplying the goods through ECO is required to take compulsory registration as per section 24. As per section 24. Okay. But now there was an amendment with respect to this particular point, that now the supplier of the goods, if the aggregate turnover is less than the threshold limit, is not required to take compulsory registration as per section 24 on fulfilling certain conditions. Sir, what are the conditions? As usual, he should not do any interstate supplies and only supply through one state, and the third one is submission of details like your PAN, plus address. Needed to submit these details. Once it is validated, one enrollment number will be given to him. Okay, that number must be given to the ECO. Without enrollment number, ECO should not give permission to make any supplies there. Okay, this is a new point actually you need to remember, ma. What is the previous point? Any person who is supplying the goods through ECO is required to take compulsory registration. But now his aggregate turnover is less than the threshold limit. He is not required to take compulsory registration if these conditions are satisfied. First one, he should not make any interstate supplies. Second one, he should get himself registered only in one state. Third one, he shall submit the details of PAN and address, okay, on the GST website. On validation of the PAN, enrollment number will be granted to him. That enrollment number must be communicated to the ECO, and ECO shall not permit the supplier to supply the goods unless enrollment is granted to him. Okay, this is another point you need to remember here. Okay. Another thing we need to remember with respect to the case is GTA. With respect to GTA, one more amendment is there. Actually, it is not that much important. That's why it is not given in the particular material. But I just want to tell you orally in this particular video. So GTA, with respect to GTA, is having two options, ma. You can follow either FCM or you can follow RCM. But previously, there is no time duration to follow this one. But now with respect to now, GTA is required to exercise this particular option of paying GST under FCM. There is a time limit regarding that. The time limit will be on or after 1st January of the preceding financial year up to 31st March of the preceding financial year. 31st March of preceding financial year. Okay. So GTA is required to exercise the option of paying GST under FCM by making the declaration on or after 1st January of the preceding financial year, but up to, that means not later than 31st March of preceding financial year. And another thing, once he selected this particular option, there is no need to communicate every time, every year. Okay. That means once the option to pay the GST under FCM was taken by GTA, it shall be deemed to have been exercised for future years unless GTA wants to change to RCM. That is another point you need to remember. And with respect to ITC also, which is in relation to your, with respect to ITC, generally corporate social responsibility. Corporate social responsibility. With respect to this corporate social responsibility, whatever the expenditure the company incurs on that, no ITC is allowed. That is the point you need to remember. Okay, ma. No ITC is allowed in respect of the goods or services which are procured by the registered person for his corporate social responsibility program. Definitely on those items, ITC is not allowed. Okay, that is the point you need to remember. So these are the amendments you need to keep focus on from the examination point of view. Hope this video will be useful to you. God bless you all.